Hey y'all, Brian Johnson here again. In this short video, I want to give you a 30,000 foot view of all of the different loan programs. So you'll start to see those here in this screenshot. And I think, and this is just how my mind works, I like to really understand the full context, the bigger picture, so we know where everything fits in and we can go from there. So you'll see with this chart, let's focus on this top left portion here, qualified mortgages. So you've got category, simple as that, qualified mortgages and non-qualified mortgages, or non-QM. You may hear that again at some point. But when it comes to our world and the homes in this area, 9 times out of 10, we are going to be in this bucket, and then we're going to be in the conforming loan bucket, which brings you to the main 4 loan programs: FHA, VA for your veterans, USDA or rural development, which we have a lot of opportunity there south of Murfreesboro, and conventional loans. So those are the top 4. So 9 times out of 10, this is where we're going to live. Now there's jumbo conforming loans, and you'll see here, and we have access to all of these loan programs, and I've originated most of these. So non-qualified mortgage, this is where you'll see the bank statement program. You'll see it lists investment properties, but you can actually do an investment property up here under conforming loans. But there's interest-only loans. There's DSCR for those types of investment properties. We can do non-warrantable condos, foreign national loans. There's a lot of options here. So anything unique, it's going to be non-QM, and we have access to that. But again, 9 times out of 10, we're going to be up here in this conforming loan, right up in here, which leads me into the next slide somewhere. Here we go. So this is where I'm just going to focus on those top 4. Again, FHA, VA, USDA, conventional. Those are the main 4 that we're going to look at. If you've talked to any friend or family member, they probably bought with one of those loans. So that's where we're going to start. And then I'll do another video later to cover these more unique products that we have. So again, traditional products. The most traditional, the most popular would be conventional. So this is the loan program that people get confused about, and they think that you have to have 20% down. In fact, if you were to put 20% down, you would not have mortgage insurance or PMI. So that's where people get confused. But with conventional, you can actually go as low as 3% down. Typically, it's 5% down, but as a first-time home buyer, there's a 3% down option. And you'll see here's some details: 620 credit score, the amount of properties that you can finance. And again, you can do your primary residence, an investment property, second home, 1 to 4 units. So keep in mind, when it comes to conforming with all of these 4 loan programs that I'm talking about, we are always going to be looking at 1 to 4 units. If we're more than 4 units, it may be commercial, and that's going to be another animal. So anyways, that's conventional. And you can do condos and manufactured homes, not including single wide. We can do single wides, but that's another program. So anyways, that's conventional. This is the most popular, probably most cost-effective loan program if you have good credit. Unless you're eligible for USDA, then sometimes that's better. So FHA loan, this is the government-backed loan program that's a little bit more flexible. You'll see here in the first bullet point, you can go as low as 580 on the credit score. 3.5% down is the down payment requirement. Gift funds are allowed. So FHA, again, is just more flexible when it comes to the pre-approval process, when it comes to credit and your credit history and your debt to income ratio. You can typically get approved for more house with this program with the same income compared to some of these other loan programs. And you can get by with lower credit scores. And again, you can get by with some derogatory items on your credit report as well. So typically, if you have lower credit scores or not a lot of money to put down, this will be a good option. I mean, and it's another a really great loan program. USDA, or rural development, and there's a specific map, and I can provide that link for you. But there is a specific map that you'll have to look at because every county is different. Because there are income limits with this program, and every county has slightly different income limits. But this is 100% financing, so that's what's great about this is if you qualify and your credit score is 620 or higher, and you meet the income limits, then you can buy a house with no money down. And in some cases, you can get the closing costs covered, and that's up to you guys. And Aaron and Cassandra, we've done many deals where closing costs are covered, and then we go USDA and they buy a house for literally no money. Half the time they get their earnest money back at closing is how that works. So this is another really, really good program, and it's ultimately available everywhere around Timms Ford Lake. I mean, south of Murfreesboro, really all of these counties are going to be eligible. We need to keep an eye on the income limits, and that's what I do. But once again, another great program. VA is very similar. It's also 100% financing. Obviously, you have to be a veteran. You can't have anyone else on the loan except for the veteran's spouse. So you have to be married to count their income and to add them on the loan. And it can't be a family member that wants to co-sign for you or anything. It has to be the veteran's primary residence. And you can go as low as 600. We can technically go lower than that if it's a manual underwrite. Up to 100% financing. Like I said, no lender fees. So we do waive our lender fees, and a few other fees, which is typically about $1,300. You can purchase, refinance. There's a few different things you can do with it. Single family residence, planned unit development, condos, manufactured homes, again, not including single wide. And keep that in mind when it comes to manufactured home, it's always going to need to be a double wide. If it's a double wide, really any program is going to work. If it's a single wide, it completely changes everything. We can get it done, but it's a specific program, and they're probably not going to be able to go 100% financing. They probably won't have the best interest rate, and it just completely changes everything. So keep that in mind. So that's just a quick summary of the main 4 loan programs. Again, FHA, conventional, USDA, and VA. And again, that's up here. That's this section. And you can see there's all these unique loan programs, and those are one-offs. I mean, we may have some opportunities to use those, and they're really good loan programs. But 9 times out of 10, we're going to live in this conforming loan in this bucket. So hopefully that makes sense. Those are the top 4. Now we have THGA, which is Tennessee's most popular first-time home buyer program. You can pair it with any 4 of those loan programs. And I can do another video about first-time home buyer programs, the down payment assistance, and how that works. But those ultimately layer on top of either FHA, VA, USDA, or conventional. So even with the down payment assistance, you're still looking at a conforming loan. And hopefully that makes sense. Hopefully it's clear as mud, as they say. But again, I wanted to give you a 30,000 foot view of just all of the different options that are out there and help you just know where to put the information and just understand the context of and the landscape, of the mortgage world and where we're going to spend most of our time. And again, that's right here in the qualified mortgage bucket. So again, hopefully that makes sense. Again, thankful for you guys. Let's keep crushing it. Talk soon. Thanks.